In this episode, we talk about why late summer, early fall is the perfect time to review your finances. Let's get started.
Let's get some money.
From New Money, New Problems, it's the New Money, New Problems podcast, a show for successful professionals searching for the tools they need to navigate financial opportunities and obstacles they've never seen. Negotiating compensation, purchasing your first investment property, helping your family with money, the highs and lows of entrepreneurship. New money brings new problems that require new solutions. Join us as we work through them together. I'm Brenton Harrison, and this is the New Money, New Problems podcast.
Hello and welcome to this week's episode. It has been a crazy busy time for me and us at New Money, New Problems. I actually just got back from the CFP board headquarters where I was part of exam development activities is what I will call it. Next week, I'm heading off to Portland for FinCon where I can reunite with my money nerds in the space. And on this Saturday, if you're in the Nashville area, I highly encourage you to come to my church's Financial Literacy Symposium at Riverside Chapel. It's at 800 Youngs Lane, Nashville, Tennessee, 37027. We'll put a link to the RSVP page in the show notes. This is something that we do every year. We're going to have keynote speaker on finance. We're going to have workshops on everything ranging from credit to budget repair, tax, entrepreneurship, estate planning, and Social Security. It's a great event that we do every year, and we hope to see you there if you are local. But all that to say, it's been hectic here at the firm. Now, I still wanted to make sure we had an episode today, and it's going to be a shorter one because I wanted to give you a few reasons why, in my opinion, September and October is the perfect time to review your finances. And if you're a client of our firm, you know this because we have dedicated meetings throughout the year. We have a meeting in the spring, right around or after the time that people file their tax return. We have an optional meeting in the summer, and then we have a fall meeting. And the fall meeting is the one where we make sure everybody is there. There are spring meetings where we don't have like a 100% success rate, but we will hound you to the death if you don't set your meeting in September and October, because I think it is just so important because of things that occur during this season. Now, specific to this year, there are some reasons that you would want to pay attention for September and October in 2025. One of those reasons is federal student loans. We're not going to spend a ton of time on this because at the other podcast that's not affiliated with New Money, New Problems, our Escape Student Loan Debt podcast goes into extreme detail about some upcoming deadlines for federal student loans. What I will say very quickly is that there's a big group of people that needs to consolidate their federal student loans before July 1st, 2026. The first group or that first subgroup would be people who are Parent Plus borrowers. The second group will be people who have older federal student loans like a Perkins loan or a Stafford loan. And there are various reasons why you not only need to consolidate your loans before July 2026, but you need to do it now if it's something that's important to you, because there are huge backlogs at the Department of Education and with federal student loan servicers. And for the deadlines that are upcoming, you want to make sure that you not just apply before July 1st, 2026, but the loan actually has to be finished and dispersed, that new consolidated loan, by that date and time. So we'll put a link to one of those episodes in the show notes so you can listen in more detail. But suffice to say, you want to act now if you're in that camp so that you are in good standing by July. And specific to this year, federal student loans are high on the mind and the reasons why you need to review your finances during this season. Another reason specific to this year that September and October is an important time is because if you were paying attention a couple months back, you'll know that we had a jobs report that was horrible. It showed what was to me the first proof of what I've said, that we are on the cusp of an epic white collar recession. It was the proverbial canary in a coal mine where you see this weak jobs data. And it kind of shows you that not only are most companies shedding jobs, but they're not replacing those jobs. Well, this month is important because literally on Friday of this week, September 5th, there's going to be a new jobs report. And if that is as devastating as people are expecting, it's going to put increased pressure on the Federal Reserve to lower interest rates. Now, I would, prefer that we have higher interest rates and everybody have a job. But if there is a downside to having a poor jobs data and having the Fed lower interest rates, it's that it could impact interest rates across the broader economy. There are tons of people out there who are in a home at a higher interest rate than they'd like, who've been waiting for an opportunity to refinance. If the Fed lowers rates, you would definitely want to put back on your alerts to see if the opportunity you've been waiting for has finally arrived. But there are also variable interest rate loans, like if you've borrowed money on a home equity line of credit or a securities-backed line of credit, where yes, those rates can increase and have been doing so for a while, but if the Fed lowers rates as a consequence of that, it's highly likely that those variable rates would fall as well. If those variable rates fall, it gives you the opportunity to potentially save some money for yourself, to put money that you're saving on that debt on other debts, or just have some breathing room in your budget for the first time in probably what feels like forever. This also gives you the opportunity to take advantage of what is typically credit card issuers' opportunity to extend better introductory offers, or to, even for current card holders, give them the opportunity to take debt from other cards and put it onto your current card at 0% interest. So, for example, during times like this, I've told you that I have a card with Capital One, and when you see a lot of tumult and volatility in the economy, I might get an email that says, hey, if you take advantage of this offer in the next 3 months, you can take transfers from other credit cards and put it on your Capital One card and pay 0% for 9 months, right? These are the times when you start to see those type of offers, and having an awareness and a financial literacy of what's going on in the economy can keep your eyes open to potential opportunities that, if you didn't have that knowledge, might otherwise be ignored. The last debt that we'll pay attention to actually goes back to the federal student loans, which again, we're not going to spend a ton of time on. But if you see a decrease in private student loan interest rates, I've talked about the fact that there's a threshold where if you owe about or less than what you make in federal student loans, it is highly likely that you're not going to be able to benefit greatly from federal student loan forgiveness. And the more likely scenario is that you pay your student loans off in full. If you're going to pay your student loans off in full, you want to do it at the most advantageous interest rates. So if you do see rates on private loans fall, this may be a time where you keep your eyes open for refinance opportunities for your federal student loans as well. So those are some of the 2025 specific reasons that September and October are great times to pay attention to your finances. Now let's talk about general reasons why this is a good time to take a check. One of those is taxes. And it really doesn't matter when you filed your taxes, there's some potential opportunity here. Let's say that you're the type of person who files on time every April 15th. You're a W-2 employee. Well, now is the perfect time, if you don't have a relationship with a tax preparer or need a new one, to reach out. Because I can tell you that most proactive tax planners that I work with, they are already closing up shop for new clients by the end of December or early January. And I can't tell you how many people, clients will reach out to me, friends reaching out to me saying, hey, do you have a person that I can talk to about my taxes? And they're asking me in February or March. And everybody to whom I refer them tells them, hey, we're not taking on any new filing clients for this tax season. So now is the time to reach out and establish a relationship if you don't have one. If you already do have one, now is the time to have a pre-meeting where you can have some strategy and have a few months to enact that strategy. So for example, when you have that relationship, you want to tell them, hey, by this point in the year, there's a few months left, but here's what I've earned in W-2 income. Here's what I've received in bonuses. Here's what I've received in equity compensation. Here are the capital gains that I've had from selling investments or selling investments at a loss. And giving that tax preparer the opportunity to kind of project a vision of what your tax return could look like could be the difference between you being surprised at what you owe or having the ability to save up over the course of the next 5 or 6 months to make sure that there's money there to pay. Because I can tell you, in my experience of reviewing client tax returns, one of the most consistent sources of extra surprise tax bills is an under withholding of things like bonus income or equity compensation, or a lack of knowledge for how investment activities and things like that will impact your tax return. And even if it's discussing things like charitable contributions or healthcare expenses, having that conversation now gives your tax preparer the ability to make changes, to give you recommendations to stem the tide in a way that they simply can't when you talk to them after the calendar year has finished. Because another consistent thing that we see is we have people who are frustrated with their tax preparer because they got a bill. And when you ask them, when did you meet with them? It's not until the year is over. How can you expect them to help you limit your taxes if you're not talking to them until after the time when limiting your taxes was possible? So if you file on time, now's the time to have the pre-meeting with enough of a buffer to make changes for your upcoming April 2026 tax deadline. If you're the type of individual who files late, then October 15th is the deadline. Many businesses file on October 15th, and this is the time for the end of tax year meeting where you have those kind of last emergency steps that can be taken. For business owners, a big one is taking advantage of things like the QBI deduction. And the QBI deduction is a huge deduction from which a business owner can benefit, where they can deduct up to 20% of the net profits from their business from their individual tax return. However, there's a lot of strategy that goes into this, especially for high income earners, and especially if you're in a specialized service business, like someone who works in healthcare or a consultant or an attorney or a financial advisor. Because once you reach certain income levels, there's a threshold where you can't just necessarily take the 20% of net business income. You, in some cases, will be limited to the lesser of 20% of your net business income or 50% of the W-2 wages that you paid as an employer. So, for example, let's say that we have a really high income earning consultant who operates as a single member LLC. Well, in this case, there's no employees to which they've paid W-2 income. And if they're in that threshold where they have to take the lesser of 20% of net profits or 50% of W-2 wages, and they didn't pay themselves a salary for the year, they have eliminated their ability to take advantage of one of the biggest tax deductions available, all because of poor planning. This is why you often see people who are in those high income levels and business owners themselves pursue things like an S Corp, where they can have a salary for themselves, but avoid payroll taxes on the profits of that company. But all of those things are things that have to be planned for ahead of time. And if you're at the end of that tax deadline and you need to show on paper a salary, for example, that's when you can meet with your CPA to say, hey, would it be helpful to give myself a $25,000 salary or a $50,000 salary or a $200,000 salary on paper so that I can take advantage of this deduction and strategize in the right way? For many reasons, whether you're filing in April or October, September and early October are great times to review with your CPA. And in whichever camp you fall, let's say that there are some dollars that you weren't expecting to pay that you have to put aside. There are ways to do so in a way that benefits you financially while actually reducing what you owe in taxes. One of those is what we call the Social Security bonus. And we've talked about the fact that there are some levels of income and types of tax that you pay that tax no matter what you earn. For example, if you make $2,000 or $2 million, you're going to have to pay Medicare taxes on every drop of your income. But there are other taxes like the Social Security tax that are only assessed against a certain level of your income. As an example, in 2025, the Social Security wage base is $176,100, meaning that for every dollar you earn above that amount, you don't pay Social Security taxes on it. You have paid everything you need to pay for the current year. So we see people who are high income earners who towards the end of the year have already crossed that threshold and they get a de facto 6.2% bonus because every check they receive from now through the end of the year does not have Social Security tax assessed. And this is a golden opportunity to do things like increasing the amount that you put towards your 401k, which has the dual impact of increasing your pre-tax deductions, which decreases the amount that you owe in other taxes elsewhere in your budget. And if you're wondering why I say this is the high income earners end of year bonus, let's walk through it. If $176,100 is the amount, if we have a person who earns $250,000, that's a little over $20,000 a month. It would take a little over 8 months for them to reach that threshold, which means that September is the first opportunity where they'd have to have that extra money on their paycheck. And we talked about 401ks. There are other opportunities when it comes to employee benefits as well. You could put more money in a health savings account. You also, during September and October, are likely getting the first amount of information when it comes to your open enrollment period, where they ask you to make a plan for the benefits you want to take advantage of in the coming year. And if you missed out on this opportunity because you didn't realize how important it was in years past, now's the time to take an evening and sit down with that pamphlet or PDF or website and actually go through things like, are you going to take advantage of the FSA, the dependent care FSA, the health savings account, and the high deductible health plan? Because now's the time when those choices have to be made. And you don't want to just be filling it out on the last day without truly having an understanding of the impact on your budget based on the things that you might have contributed to in the past year. So if you did do the FSA and the dependent FSA, this is now the season where you need to have a plan to make sure you don't leave too much money in those plans. A dependent flex spending account is a complete use it or lose it plan, meaning if you don't spend your money by that deadline, it reverts to the plan forever. It is gone. A flex spending account, however, does allow you a small allowance that can be carried over. Right now, it's a little over $600. So you don't necessarily need to spend all of your money from your flex spending plan. But if you have $1,000 in that plan and you have the ability to set your eye exam, to set your doctor's appointment, to go to the dentist because you haven't gone in a while, this is the time of the year where you want to make those expenditures to get under that threshold to make sure that you don't lose those dollars. And then lastly, the holiday season. I can tell you the biggest budget buster, to take my time on that high level alliteration, is holiday season. Whether you're a single person and you're trying to make plans to do Friendsgivings or travel to see family, or you're a family and you're not only trying to do those things, but you're also trying to budget for gifts and things of that nature, the holidays can tear up your budget. And while you planning ahead doesn't necessarily mean that you won't be spending a tremendous amount of money, there are ways that you can optimize, right? Maybe you are going to take advantage of rewards points and miles. Maybe you set a limit for the amount that you're going to spend on gifts instead of spending in real time and being surprised at what you spent and your spouse spent, things of that nature. It's not meaning that you're going to live on beans and rice. I'm not a big fan of you staying home while your family are 2 states away having Thanksgiving together, because money's to be made, it's to be saved, but it's also to be enjoyed. And there's data that shows that people regret their expenditures the least when they spend it on experiences and community. So you want to make sure that you do those things. You just want to make sure that if you have conversations ahead of time, you give yourself the best opportunity to mitigate the damage that can be done so you don't feel like you're starting from scratch on January 1. Those are the big reasons why this is the great time of year to review your finances. I hope you found them helpful. If you are not local, I'll be right back here next week with some more value for your finances. If you're in the Nashville area, again, I encourage you to meet us on Saturday, September 6th for our Financial Literacy Symposium. I hope to see you there.
Let's get some money.
From New Money, New Problems, this was the New Money, New Problems podcast, a show for successful professionals searching for the tools they need to navigate financial opportunities and obstacles they've never seen.